Welcome to the August 2021 Trade of the Month. We're going to look at a set of signals that was called by Pair Trade Finder Pro in the beginning of August, and the trade exited at the end of August. So this is from our Fast 50 US equities pairs, and the left symbol is Amcor, and the right symbol is Berry Global Group. If you take the time to read through this, you will see that they both make packaging across a number of industries, a lot of it retail, and they have very, very similar descriptions and business models. You can also go through with this great fundamental snapshot function of PTF Pro, very quickly side by side all of the major statistics that would allow you to decide whether or not these two companies are sufficiently fundamentally correlated to want to be traded. And we've done that work for you when we create the Fast 50. We boil a universe of over 2,200 US tickers that have over 2 billion market cap and $2 million a day of traded volume. And we do every industry subsector. We backtest every symbol in that against every other symbol in that to choose the top 50 US equities pairs that have great backtests and look set to deliver high probability trades going forward. So without further ado, the trade, as it was called, the first leg was on the 18th at the close of trading, and it was to short Amcor and go long Berry. And then on the 19th at the close, you had another leg go through. So obviously the ratio was blowing out even more. And again, sell short Amcor and long Berry. So you put 10,000 to play over the course of 2 days in that trade. So first thing you would do when you get that is ask yourself, what's going on? Is there news on the symbol? And the easiest way to find that is to just go into this tab here, Fundamental News and Calendar, and open links in a new browser and hit News. I've already done that. And what we can do is we can screen by date, and we can see that the last major announcement for Berry, you can go on their website as well, but in Yahoo Finance it's saying they had their Q3 earnings estimate back on about the 5th of August, which was well in advance of when this signal was called, so no news there. What we do see on Amcor is that this signal is being caused most likely as a result of the Amcor earnings announcement, okay, which is, Amcor is a Swiss company, and they announced on the 18th of August. Now, what's important there is that's after the close of the market on the 17th in the USA. So we would not normally take a trade anytime that there's an earnings announcement the day of, but what we can see here is, let's just go to the pair charts history. So the market was aware of the earnings on before the open on the 18th. So you have a full day's trading on the 18th that allowed the market to look at that earnings results. And then there was another signal called at the end of the next day's trading as well. So the information's in the market as of close of play the 17th. And interestingly enough, what you do see when we look at the share price graph of Amcor, so here's the 17th, that was the day before the announcement, and it had a big positive day. On the day of the announcement, this is after the announcement, it had a big rise, and on the 19th it had a big rise. Well, you'd say, well, that's caused by the earnings announcement. Well, maybe. However, what you can see is that Goldman Sachs on the 18th came out with a sell recommendation on Amcor on the base of that earnings results. And if you look at the news release here, you've got, for example, Zacks is saying they met estimates. So there was no surprise, according to Zacks, and they track earnings surprises. So really, it's hard to say whether there's a fundamental value shifting event. If you read through the news release, you just see that they're having good results. And we also saw that when Berry announced their results, they're also having very good results. They top Q3 earnings estimates, and they update their view. So we don't see that as anything really fundamental changing the value, but what we do see is that it took a while, so to speak, for this to get reflected in the price. But what happens? So if we dug down more deeply on the share price graph, so I won't do here because of trying to keep this video brief. However, what you'll see is that not only did Amcor perform very well on the two days which we showed, but we also see that Berry didn't do so well. The share came down. I won't say substantially, but almost 1.5% when Amcor announced. So maybe that's readjusting expectations on Berry based on what Amcor came up with. However, what that did do was cause these entry signals. And so you have to decide whether you take them or not. We can look at dividends. The dividend dates are fine. But based on the way the information is in the markets and the fact that there's a full trading day before this signal was called, and then there was another full trading day and an additional signal was called, we would have taken at least the second signal, might not have taken the first, up to you. However, before you would decide whether you take the signal, you got to review your pair chart. So let's do that quickly now. So here we see the entry signal, the first one and the second. And we can see that the ratio has been bottoming out and is now starting to rise, crossing over the moving average of the ratio and reaching over here on the upper left. You can see 3.36 standard deviations on the first call and then 3.95 on the second entry, layer 2. Okay, those are pretty substantial. If you see the last time it deviated that far, it was here. Again, similar kind of levels. So we're into its sort of max zone. And then if we confirm that by looking at percent from mean, we can see that, entries were called when it gets to about 2% away from mean and all the way to about 2.2. Same thing here. This one was called, the first one was just under 1.5, and then the second one was about 1.8. So it's in line with historic maximum percentages from mean before you see a reversion. So those look very good. Then one thing we always check is the RSI. We look for divergences, and you can see here as this starts to trend up. So you have first high, second high, and here you have a high. So here's a high and then a higher high. This is a high and then a lower high. So we call that divergence. So this is going up and this is going down, not only on the first one, but also on the second one. So we like to see that. That suggests that this may turn around in the short term. And so on the basis of that, we would also be excited about the trade and think that there's a reasonably good probability that it hits. So had you done that, you had taken the trade, you would have been in the trade for 1, 2, 3, 4, 5, 6, 7, 8, 9 market days, and you came out both legs on the 31st of August when it went below 0.80. That's where it closed at, 0.80 standard deviations. Our exit is at 1.0. So when that closed, you had made a $536.78 net profit on the 10,000 leg exposure that you had taken on by having both of these legs in play. So there you have it. That's a quick look at one of the Fast 50 US equities pairs using layers, layer 1 and 2, and a very successful exit. And we hope you're in the trade, and we hope you made some good money on that. Happy trading, everyone.